Bitcoin and the majors start off with a fantastic trading session here on Wednesday as we climb higher for the skies. Are we witnessing a genuine breakout, or again, are the bears going to be rewarded? Find out in today's episode. Also, we're going to cover why Bitcoin did not perform as expected and pump during the COVID-19 pandemic, or in the early phases of it when the rest of the markets were dumping, and why Bitcoin actually followed along with traditional markets instead of opposed to them, as we would expect our digital store of value to do so. We'll also be giving you guys an update on the digital yuan, giving you guys the latest news on how the government is coming for your money in today's episode of Breaking Bitcoin.
Rockwell for NBTV, and this is Breaking Bitcoin.
Welcome back to Breaking Bitcoin. This is your daily source for everything markets and finance, from cryptocurrency, Forex, traditional markets, commodities, ETFs, you name it, we trade it. My name is Justin Wise, lead analyst and senior mentor at CrackingCryptocurrency.com. Hopefully you guys are doing absolutely fantastic. We've got a fantastic show for you, starting off with a strong call to action. If you're new to the channel, make sure to like, share, and subscribe. Of course, there are links in the description below for everything you could possibly want. And if you want to trade along with us, make sure to head over to premium.crackingcryptocurrency.com. With that being said, we're going to talk about today. As I said, the first thing we're going to cover is why Bitcoin did not actually perform the way that many analysts had expected it to. We covered yesterday, in yesterday's show, we talked about the Fed's scathing report. The Federal Reserve Bank of Kansas City issuing that report on how Bitcoin was clearly not a store of value, how it was far from a store of value, how it was a peg, tied to risk on markets, just the same as anything else that tracks the indices, and how it didn't actually show the characteristics of gold. And we kind of poked holes in that argument. We talked about why that was flawed for many reasons. We talked about, obviously, you can also cut Bitcoin some slack and say, well, it is a freshly new asset. It is going to take a lot of time to get to be that safe haven store of value. Argument, which many are proposing it to be. But we pointed out some other technical flaws. So make sure to go check out yesterday's video on that. There'll probably be a Breaking Bitcoin Bits for that episode as well. But today, we're going to cover, some more nuanced positions on why, according to Celsius CEO, the CEO of Celsius, and some other information as well as eToro's latest analyst update. Then we're going to be covering our update on the digital yuan, the Chinese, People's Bank of China, and their latest update to their central bank digital currency, rolling out the digital renminbi, the digital yuan, we talked many times on this show about the repercussions that has, and actually why the American regulators might be forced to take a more favorable approach to something like Libra, because they're not going to take a more favorable approach to something like US dollar tether over something like Libra. They're just not going to. Governments aren't going to do that. And why, from their vantage point, if they don't get a digital dollar, which they certainly want to push for. We covered previously on the show the appointment of Brian Brooks, former Coinbase legal advisor, who is a strong advocate for the digital dollar, and how he was appointed to the office of the comptroller of the currency. So that's all important stuff. Obviously, the groundwork has been laid for the digital dollar. And then, of course, you've got a vast swath of the internet who feels that this is the moment where Trump is going to institute the gold hard standard and audit the Fed. And who knows, that may or may not be true. With that being said, let's jump into today's first episode. And then I want to get to let's hop into today's news, because I want to cover that. And then I want to get into the markets, because things are popping out there and there's a lot to go over and cover today. I didn't know. Curtis says, I didn't know I bought a ticket to the gun show today. These guns shoot to kill, baby. All right. Let's hop into it, guys. Let me know how you're doing in the chat. Hopefully you're doing awesome. If you have any questions or chart requests, drop them in there. The moderators will bring them to my attention. We'll do the Q&A section and chart requests at the end of the show, following the news and following the analysis. So let's get going. All right. So our first story today. Now, Alex Mashinsky is the CEO over at the crypto lending platform Celsius Network. And he appeared on the David Pakman show yesterday, and he discussed why Bitcoin crashed in March, along with everything else, actually, despite Bitcoin having this reputation and promise of being a safe haven asset, right? So the question is, why was Bitcoin not ready to shine after the 10 years of work that have gone into it at the most critical moment, at the biggest economic crunch, at the most critical downfall, when we really needed it to shine, when the world economy started to melt down? Why did, Bitcoin, why hath thou forsaken us, right? So this individual goes on to explain how Bitcoin has not yet become enough of a non-correlated asset for investors to turn to at times like these in the current financial crisis. Like Bitcoin is, if you are unwinding a large portfolio, or if you are a large investor and you are watching the SPY, the Dow, the NASDAQ collapse, stocks fall off the bottom, the last thing you're really going to be thinking about is Bitcoin, he says, at this point in time, which seems to kind of be the same argument that we covered yesterday, which is giving Bitcoin quite a lot of slack. Honestly, I like to be fairly critical on the things that I support. But I mean, that whole argument is predicated around, hey, Bitcoin, you just need more time, right? Like Bitcoin is certainly the digital store of value, which I believe that it is. We just need more time for more adoption and there to be more faith in it when we get to a point where that becomes very important. Now, Mashinki pointed out that if you take any snippet of Bitcoin's chart data from the past year, you would see a very high correlation between the stock market and the price of Bitcoin, which is exactly what the Fed Kansas City report pointed out as well. And of course, there are correlations. In fact, there are some algo trading that utilize the there are some, algo traders that I'm aware of that utilize the same kind of price action of the SPY to offset correlation on Bitcoin's price action, right? Now, this correlation signals to the fact that investors, during the current crisis, to them, Bitcoin is still a risk-on asset that enjoys speculative interest during good economic times, and of course, is the first to get sold off during poor economic times, right? And of course, this was the David Pacman show where he appeared. I mean, that guy looks, David. I mean, he looks like some guy that I know. Anyways, now a recent report from eToro on the crypto markets confirmed something similar, right? That the past 12 months has seen a strong correlation between the S&P 500 index, for instance, and Bitcoin's price. However, the report also notes that since last month's market-wide March meltdown, Bitcoin has since recovered much more. Hold on just a second. Got my audio issues here. Sorry about that, guys. Little audio technical idiot. All right. This should work. Okay, here we are, back in the scene. All right. There we go. Okay, and we're back in the saddle. Okay, so as we were saying, since last month's March-wide market meltdown, Bitcoin has since recovered significantly from its trading lows. And due to the shift in the trend over the past several weeks, Bitcoin now finds itself more closely correlated with gold than traditional markets. So the correlation was extremely strong for the S&P 500, but over the past month, it has correlated more with gold. Still, even with Bitcoin riding on the back of its strong recovery and the upcoming, the Bitcoin halving right around the corner, right? Bringing its own hype cycle that potentially cannot be priced into the market, along with newly circulating data suggesting this correlation to gold over the S&P 500. we still, I mean, and to be fair, listen, to be fair, with the eToro analysis and even with the Fed analysis, right, that this correlation to gold is becoming. I mean, it depends on how much you want to smooth the data out, right? It depends on how much you want to smooth the data out. Both gold and silver and stocks and Bitcoin have seen a dramatic bounce off of the bottom, right? So if you're looking at the difference between intraday trading sessions, the difference between 15-minute bars, the difference in closing value, the difference in rate of change, I don't think that these things are actually too disparate. I don't think these things are too disparate. I think at this point in time, they don't have a whole lot of data. They're going off a month of data. So I'm actually going to say, although again, this is not the most Bitcoin Pro argument, I'm going to say that the data on that is actually really not in yet, right? Now, of course, Bitcoin, even with traditional markets right now, still has this very strong reputation for volatility, but apparently these guys haven't seen the oil markets lately. And Bitcoin, the argument here, that Bitcoin has yet to capture the imagination and faith of the masses as an alternative asset to hold at times of instability, like we saw in the March market crunch. But we could potentially be seeing that start to change now as this pandemic continues to unfold, as the lockdowns continue to go on, as restrictive measures continue to go on, as it seems that some governors want to play Mad Max, right? Like, just, Orwellian. And Bitcoin enters the next phase of its price and adoption cycle. So all of these things are occurring while some strong fundamentals are occurring with Bitcoin, right? Like Lightning Network adoption increases, right? New products and services continue to come online. Bitcoin continues to grow in actual use case and adoption. More nodes are coming online every single day. More people are using, more wallets are being created. And of course, you have the halving. On top of that, you have, for example, all of the features are going to be added to Bitcoin Core this year. For example, Taproot, among other things, the things that Taproot are going to open up, Schnorr signatures. Now, going back to Mashinki said that 5 years ago, Bitcoin looked volatile against stocks. But times are changing now. And those days are kind of gone. And these days, when Bitcoin has more stable days than traditional markets, ones in which Bitcoin moves 2% in a day where the stock market has moved 5 to 10%, perhaps in an attempt to, going back to the David Pac-Man show, perhaps in an attempt to dazzle those in David's audience less familiar with Bitcoin's epic run up to date, shared some numbers on Bitcoin's underlying performance over the last decade. And it's not ungermane of us to not notice that, right? He cited the example of Netflix as the best performing stock from 2010 to 2019, and how Bitcoin over that same period outperformed the world champion of the stock market by over 2,000x, right? He also brought up the recent price crash in the oil futures market. He pointed to the irony of negative commodity prices in a world that pokes fun at the volatility surrounding Bitcoin markets, which of course we did as well yesterday, despite the historic crash in U.S. crude futures and what it signals for the health of the overall economy. Bitcoin was mostly sideways that entire week. And now, as we know, it's even charging ahead, reaching up for the $8,000 levels, right? Now, oil is just the first such major industry to take a hit due to the COVID situation, like the effects of that actually rolling out to the supply chain, the effects of that actually affecting commodities. And we see it with demand for oil at an absolute low, with oil production ramping up. There's no place to put it. And so what's going to happen to the price? It's going to crash. Now, investors are likely to see other industries experience similar cycles, right? From consumer goods to technology, all over the place, right? There's just lower demand. And of course, there's lower money. There's less money for people to invest and spend for consumers, for consumption going into people's pockets, right? So the idea that we're going to see some V-shaped recovery seems silly, right? We've seen a great recovery lately with some investor confidence, and I think long bias that the money printing is going to prop the market up, but the effects are going to be felt in the actual economy. Remember, the stock market doesn't reflect the actual economy, right? It reflects our perception of the future, all right? A little bit of fear, panic, greed, and manipulation thrown in there. Now, with panic over the COVID crisis, really pushing normal investors off of their square. And the reality, even like CNN and CNBC is talking about the fact that we are moving into a recession or even a Great Depression moving ahead. Markets have been unwinding. Investors are liquidating positions so that they can shore up capital and patch holes everywhere across their portfolio. And this includes some Bitcoin and crypto holders who found themselves needing to move into cash quickly, most likely to meet other financial obligations or priorities that are going to take precedent over their speculative adventures in the digital asset space, right? However, measures being taken currently, according to Machinke, to stabilize the United States economy, the stimulus packages, other government spending, money printer go burr, will eventually draw investor attention toward the fundamentals behind Bitcoin, making it appear safer than ever before against a backdrop of a troubled world economy. He also pointed out how there is currently more money piled into bonds than stocks, and government's current course of action that they are currently undertaking now in order to save the economy may inevitably, inexorably weaken the United States dollar. Right? Not only the United States dollar, but government and investor confidence and its bonds, right? Enough to bring some of those bondholders to reassess their positions and consider turning to crypto, all right? Concluding that betting on Bitcoin right now is betting on deflationary pressures winning, and when everyone gets nervous, they all flee to cash, and that includes selling Bitcoin despite all of that, right? Bitcoin still remains one of the best stores of value that exists out there right now. So what do you guys think? Was Bitcoin temporarily dragged down along with everything else melting down in March? Do you think it's starting to decouple from traditional markets as the money printing fires up and the economy continues to unravel as positions continue to unwind? Or do you think this is a unique time in history and that there will be nowhere for investors to run as markets unwind heading forward? Will Bitcoin's safe haven status be tested and finally broken? Or let's not say broken, but will it continue to trend down along with the rest of the market? Or will its true value come shining through over the next 12 to 18 months as the rest of the world continues to plummet into chaos and the true safe haven value of Bitcoin? Or, are we asking the wrong questions, right? Like, again, it's going to fall down, but that doesn't mean anything. Everything's falling down. There's no such thing as a hedge against deflationary events, right? Let us know down in the comment section down below. Okay, our next story. This one's coming to us from Forbes, and it is an update to a story that we followed closely in 2019, and that's China's central bank digital currency, or the digital yuan project, that was slated to begin its rollout and testing phase this year. The latest news coming out of the South China Morning Post is that several U.S. multinational corporations are reportedly willing to help with testing and the adoption of China's incoming new digital currency, right? Major American chains like Starbucks, McDonald's, Subway sandwich restaurants in China were on the list of firms announced by the People's Bank of China that will be participating in the testing of the national digital currency in the near future, right? Now, digital currency, of course, is a pretty generic term that may or may not be an actual cryptocurrency. Of course, this is not going to be an actual cryptocurrency, right? So for the sake of argument, cryptos are decentralized and permissionless by design, and often are going to be used for privacy and censorship resistance, right, for its users, all of which are antithetical to the approach that is currently being taken by the Chinese government and governments around the world in general. Now, many of these newly listed test sites for the Chinese CBDC, which is commonly being referred to as the digital yuan, are located in, I can't pronounce that, Shangin area, a city being built just south of Beijing, and its pilot program will see the participation of hotels, convenience stores, bakeries, bookstores, and gyms in the new city. All right. No final release date for the digital yuan has been set yet. But so far, the project appears to be mostly on track, despite the havoc COVID has wreaked on the Chinese economy. Now, it's unclear how these 3 U.S. brands were chosen for the pilot run in that city. But it was apparently a local decision to include those particular franchises, and it's not to suggest that it will be a nationwide McDonald's test run, just the McDonald's in that small area. Now, China, of course, is an ideal test bed for a national digital currency rollout. The population's already quite accustomed to using digital payment technologies. Chinese tech giant Alibaba and its payment app Alipay is more ubiquitous in China than Visa or MasterCard. QR code-based transactions performed using smartphones are extremely commonplace in China. China's own stats estimate that about 890 million unique mobile payment users made transactions totaling around $20 trillion in 2019 alone. And the number of Chinese the number of Chinese individuals making mobile merchant payments is expected to rise from around 577 million last year to an estimated 700 million in 2022. And this digital yuan system is expected to onboard more the lion's share of that growth. Right? China's government's move into digital payments would potentially be a competitor to Alipay, which is privately owned. Though for now, the government does not seem to have any plans to roll out a payments platform or a blockchain for those transactions. China, of course, is the country that went from merely joining the World Trade Organization 20 years ago, going from its relative. So at that point in time, I mean, there's a lot that we could talk about with China's economy here, but at that point in time, they were fairly poor and cash-based society. To 20 years later, they're a highly innovative economy with an urban middle class in major cities that are all plugged into the internet, right? And they are utilizing far more digital transactions than I would argue that most consumers are doing in America, right? Now, a major factor in contributing to China's adoption of digital payment technology is the country's high level of bank account ownership. About 80% have access to a numbered account, right? This serves as an important foundation in having the public fund their mobile wallets, which were led, to the rise of, let's say, two heavy hitters in China's payment domain. That's Alipay and WeChat Pay, right? So they needed to have access to a numbered account, an actual bank account, to be able to fund their real thing. In places like America, we have less of the population that has access to banking for whatever reason. China has been able to build its digital payment ecosystem on the backbone of its existing financial infrastructure in the form of bank accounts and bank cards and clearing and settlement systems. And both Alipay and WeChat Pay are third-party payment companies. And that highlights their reliance on an underlying bank account. Right. Now, a second factor that sets up China for widespread digital currency use is smartphone ownership, right? Including in rural areas, right? Just about every single person owns a smartphone in China. So pretty staged. The way that they've set everything up really makes them, a fantastic place to test a digital currency. But, it behooves me to mention this every single time I talk about this, right? Not permissionless, not decentralized, and probably not what we want, right? Not what we want. If you guys think, as I've said many times, right, when we talk about banking structures in America, separation of powers is a very important thing. Separation of powers is a very important thing. And when you have your government and your issuer of money actually controlling the commercial and private banking sector and controlling access and monitoring transactions, there's really nothing that you can do to get away, because they are going to be inexorably tied to the executive branch of your government, right? Or your law enforcement branch or your judicial branch. So the idea of putting banking in the free market, in private corporate hands, is better, because even if mistakes are made, everybody wants the government on the hook for everything, right? The government already puts themselves on the hook for everything, if you're big enough to fail. But you have that separation of power, right? You have that separation of power where, whoever you're doing your banking through can see all your transactions, and they have to share. I mean, you have to set barriers in between these levels of power, right? The more power that you centralize in one place, if you give human decision making to it, problems happen, right? And this has been proven time and time again. And that's why something like the Bitcoin network works without a central command and control style function. So we want to be very aware of this. CBDCs are not going to offer any of the features that decentralized currencies offer, that decentralized cryptocurrencies offer, and they are a real threat, a real danger for human freedom and liberty around the world, because they remove the separation. They remove the separations that keep us somewhat safe, right? They remove the separations that keep us somewhat safe. And you look at situations like this current COVID pandemic, right? This is going to be used to justify just as, September 11th was used to justify walking back human freedom, to justify walking back, the list goes on, right? And this is no doubt. So there's systems that work fine under normal operating conditions, but governments have a tendency to never let a crisis go to waste. All right, with that being said, guys, thank you so much for the Crypto Currently segment. Leave your comments in the section down below. Let's get over to today's analysis. We're going to take a brief break while we get the studio set up for that, and we'll be right back, guys. Don't go anywhere. What do you mean I left the mic on? I would never do such a thing. All right. I see that. Yeah, someone stole my door. Yeah, did you guys see that? Yeah, it just disappeared. All right, guys, listen. We've got, obviously, listen, a huge movement on the 4 hour, on the hourly, on the daily, coming out of BTC. So let's waste no time. Let's get right down into the daily, see what the system is going to be signaling for today's daily close on the daily time frame. All right, looking at the breaking Bitcoin system, we can see that Bitcoin closed above the baseline yesterday. So I removed my hedge. I have spot long exposure to Bitcoin. So I've been long on Bitcoin since yesterday's daily close. Also took a long on ADA as well against USDT. That's performed fairly well. A couple other positions that we currently have open as well. All right, so we have closed above the continuation. We have closed above the baseline. That means our directional bias is to the long side, so we'd be looking for trades to the upside. Now, for our most conservative settings, we are above the entry qualifier. We weren't yesterday, but on today's daily close, we are above the entry qualifier, which is at 74.38, and that is letting us know that the better entries are going to be in between the baseline and the entry qualifier for looking for swing trades to the upside. That means entries between 6,000, let's just call it 7,000 and 7,438 for daily swing trades are going to have a better risk to reward ratio because of their distance from our mean, or their distance from our baseline. So that's what I'm going to recommend. I'm going to recommend caution. Doesn't mean you cannot take a trade while price is closing above the entry qualifier. If you want to be more restrictive, it does mean that you will not with your strategy. However, there will be opportunities, many opportunities, where price will actually move in your favor, and you can enter there. Just be aware that it's recommended to use lower risk and that you do have to deal with the fact that you are not in an optimum price entry area, right? We've had a nice big movement to the upside, a nice decent retracement on the intraday scale here, but for daily time frame trading, we have closed above the continuation filter. That is in and of itself a continuation long signal, right? Is the trade entry signal to re-enter into a risk on long trade. So we'll be evaluating where the price of the candle actually closes in relationship to the rest of our indicators as well. So summary, we have a continuation long signal, a continuation long trade entry signal on today's daily close. We are also above the daily baseline, meaning that our directional bias is to the upside and we can trade. Caveat here being that we are above the entry qualifier, meaning that we're not in the most optimum area to enter. Therefore, I would counter that with taking lowered risk on the trade. All right, let's take a look at what our indicators are signaling for. Minx has actually crossed over and is generating a long signal on today's daily candle. We did have the Wada Atar explosion long signal on yesterday's candle as well. So our volume, So let's look at the components of Wada Atar explosion. Our momentum confirmer here is confirming that price action is to the upside. So this is confirming bullish bias, looking for bullish or long trades. And if we look at our volatility filter here, it is rising. We have a rising explosion level, meaning that the Bollinger Bands are separating, volatility is expanding, and that is what happens when we have consolidation, and then we begin expanding and moving into a new movement. And that gives us quite a bit of confidence that we can actually kind of expect a more volatile movement, a more pronounced movement coming out of this long consolidation, right? It's kind of like a coil, right? The more you contract a coil, right? And we can see that price action has compressed over time. When you let go, that coil is going to expand very quickly. And that's what we expect to see from price action. Interestingly enough, our main momentum confirmer, right? Looking at parallax, which is detecting the divergence between the relative strength index and the commodity channel index, is signaling bullish bias as well. So we do have positive momentum coming from parallax as well. What this equates to is price above the baseline, continuation long signal from the breaking Bitcoin initiator. Also, a primary long signal from the Minx indicator. Wada Atar explosion confirming the trade both with momentum and with volatility, and parallax, which is our primary momentum oscillator, confirming the upside bias as well. So things are pretty primed for daily at-risk long trades. The only caveat there being, as I mentioned earlier, where we're closing in relationship to the qualifier line, right? So big movement into cryptocurrency today. Let's break down the 4-hour time frame. Let's see here, 4-hour time frame. Didn't really catch this, not with the BB initiator, with the current settings that we currently have on. Let's see here. Minx had signaled for a long signal over here, which you could have taken on the very next candle with full confirmation and been in this trade. The BB system, which is not designed for the 4-hour, would have gotten you out of here. But the Minx, Wada, and Parallax system on its own on the 4-hour handled this fairly gracefully, fairly well. Also getting you in right on this candle right here, it seems, as we close above the baseline and then price moves to the upside. All right, looking down at... All right, so we'll keep that on the daily. Let's look at the 45-minute chart and look at significant VPSV levels. So we had talked about yesterday. We had talked about this level right here, this untapped point of control at 73.11. That's where I would be looking to see a significant retracement if we do end up selling out of this consolidation a little bit. Price again currently trading at 75.34. So that is our previous point of control. We did blow right past that level. So I would actually expect to see price come down and tag that 73.11 and move to the upside from there if we do end up holding that level from support. This represents a break, pullback, continuation type setup. This represents a resistance being turned into support and being tested in that fashion. And again, we only have that volume. We also have that volume profile, session volume, point of control area right there, an area of high traded horizontal price to give us some confluence with that area. So entries around 73.11 would be fairly would be a fairly good idea, in my opinion, if one was angling, if one was looking to optimize their entry with the form of a limit, with the form of a limit entry, with the form of a limit buy. Right, getting down below that level, we have 71.38, and in my opinion, if we close below 71.38, if we're trading below 71.38, that is really an indication that this rally to the upside has failed, and I would not really be an interested buyer in this range until down in the 65, 64s, just looking at this range of price right here. So coming back to 73.11 and holding that level and pushing up, quite bullish. Closing below 71.38, quite bearish, and starts to flip my bias to the short side. Most likely the system will already have us in a short prior to that point in time anyways, though. Okay. Renko. Looking at Renko has been quite bullish, giving us these nice long signals. We are attempting to flip now and print a bearish candle. No indications yet, but of course that's because of the large move to the upside. So Renko timeframe traders might be looking to switch here in just a minute. Looking at S&P mini futures, again, we can see the lack of the bullish movement here, although we did have we're having a good trading day for the S&P mini futures and overall the traditional markets as well. Nothing really convincing. The other thing that I want to point out is on the, we talked about these CME futures for Bitcoin. You know, if we look quite clearly, we can see that we got this continuation long signal early on the CME futures, so excluding weekend data. So this is a really interesting point. I know that some individuals are building daily strategies now around the CME futures, which is kind of fantastic to see, which is really cool to see. Them excluding that weekend data, using the clean data from the CME futures and building daily swing strategies around that, which is totally possible, and then just taking the weekend off. And that's a consideration, certainly a consideration. That's not actually how I do things. I do end up trading on the weekends, but certainly something to consider. All right. All right, here we go. All right, latest from the Cybot. Ended up buying on the close of this candle, open of this candle, moving to the upside. No exit signal yet. This is a 2-hour system. Let's see how it's performing on the 4-hour system. Let's see, nothing on the 4-hour system. This is a pretty restrictive bot, which is fine. It's not designed to grab every single movement, but really not taking advantage of this particular movement right here. So nice, safe, and stable, locking in exactly the gains that it's supposed to be locking in. All right. And I don't actually have... we'll be looking at the ISA spot here pretty soon, but not on today's show. We're working on getting that finished and optimized. All right. Let's take a look at crypto bubbles and see what the broader cryptocurrency market is doing today before we get into other markets. We've got the Hive token up 53.9%, XLM up very well, Digibyte, ONT, Matic, pretty bullish day for the entire market overall. Cardano, which I do have long exposure to as well, up about 9.1%, NRG doing well, Doge doing okay, Verge, Bytecoin, Engine Coin, Tezos, pretty much everything doing pretty well today. The only thing that's slipping is SXP. Ethereum not outperforming Bitcoin today. Bitcoin up about 6%. Ethereum only up about 3.7, meaning that FBTC should be taking a hit. Let's see here. Yeah, kind of the last heat map area on BTC as well is coming in around 73.95, which is a little higher than that 73.11. Yeah, we can see right here is that 73.11. You can see where we blew past it. All right, we can see over the last couple of hours, we are actually starting to see the markets pull back and correct. We can see that in the S&P 500. We can see that in all the CME E-minis right here. We can see VIX actually start to rise back up now as the euro dollar gets a pretty significant sell-off. So these are pretty violent sells across all this. So again, the idea that we might actually want to wait until daily close and look for that optimum entry might not actually be a bad idea. And we can see that from the actual ETFs and their closing values as we move in to the afternoon and getting closer to market close, looking like we might actually, looking at the actual ETF, get a bearish close on the SPY, on the Qs, on the Dow, while the Dixie continues to rise, right? As gold has a good day, as silver has a good day, as actually the Brent crude index actually has a good day, the CFD. T-Note's actually having a good day as well. Now, this indicates to me, again, this really indicates, especially if you looked at the fact that we closed below the continuation filter on our major ETFs, on our major indices a few days ago. And I've had about 3 days of a rally, but very weak, very sluggish. I think that a lot of individuals are taking this opportunity to get their sells in because they didn't, because there's a lot of fear in the market. So this does look like a retest of previous support. This does look like a lower high, and this looks like we're going to sell off from here. And again, we can have that confirmation once we actually take out this low. But I would actually expect to see somewhat of a gap doing that. So something to consider as we look at our ETF and CFD trades later on today. Let's take a look at the USO ETF. Now, I had shorted the USO ETF. Was actually able to get my hands on USO. And I wanted to share something that a member shared with me. And he was explaining to me that the primary reason the USO did so poorly is that its structure was longing 80% May futures and 20% June futures, right? Now, on April 21st, it moved to a 40% June, 55% July, 5% August to take off some immediate term risk. That's why it did poorly when I actually ended up. That's why it actually did poorly, which it was in my favor because I shorted the ETF. When I actually entered the contract, and why it's actually now slowing down to take off some short-term risk. So very similar to Brent in the West Texas Index, we might actually be able to see some upwards pressure here from the ETF, currently trading at about $2.67, giving us a contrary play potentially on the USO oil ETF for those who are interested in the ETF. We'll be talking about this more in the Discord for premium members later on as well. I have some thoughts on some other ETFs that I want to get some long exposure to. All right. So moving on to my open trades anyways, I am short on the euro yen, getting a very nice movement to the downside today, hitting my first take profit. Now I can safely move my stop loss to break even. I am now out of my soybean short. I had taken profit on that wick to the downside. I'd moved my stop loss to break even. Price now has hit my break even stop loss. So that trade is closed profitably. The euro dollar I am short on, moving in my favor now continually. The Kiwi Canadian, I did not end up closing this yesterday, playing off of the reversal baseline bounce, and now I have an opportunity. Now, I'll be evaluating this at the end of today because I'm not quite sure whether I'm going to end up exiting the Kiwi Canadian or exiting at a loss or holding on. I think that I will most likely be exiting this, particularly because my confirmer has flipped to the downside, as well as the VOS predictive filter has also now crossed under. So I'm kind of grateful for the opportunity to get out at a better price. If I wouldn't be trading daily closes, I might have caught this wick, but of course there was a lot going on in cryptocurrency as well today. So just not something that I was able to catch to its full potential. Still short on XRP BTC. Nice scam wick to the upside today, but overall, again, closing exactly where I want it to. BCH BTC still short on this pair as well. This one's been a bit of a nail biter, but again, finally moving in our favor. Palladium, not yet an exit signal on Palladium, so I am going to go ahead and stick to my guns on Palladium here and see exactly how this goes down. And of course, West Texas oil moving to the upside now. USO was able to lock in profits off of yesterday's dump. We'll be reevaluating this. Hasn't hit my break-even stop loss yet. Let's see here. The Aussie Kiwi hasn't moved too far. The Netherlands 25, which I got some long exposure to, hasn't really made too much of a move. And of course, I went long on Cardano. last night against the USDT pair. So overall, this is moving well. So for myself, anyways, open trades are doing quite well. And I'm just kind of, again, I talked about this yesterday. I have mostly short exposure open to the broad markets. Most of my positions open right now are shorts, especially the way that I have my portfolio configured as well. But, happy to have that long exposure. Happy to have that long exposure in BTC and be overall not flat, long exposed, spot long on BTC, and things are going well. So I removed my flat, I removed my hedge, and I'm just kind of happy to be long. So let's take a look at, as we move into the last few minutes, last couple 10 minutes of the show here, let's move into your guys' questions and take your chart requests. Dark Rico, thank you so much for the lemons. Robin from the Hood, thank you so much for the lemons over here on D Live as well, my friend. Let's toss some lemons in the basket for my D Live people over here and distributing those rewards. Max X wants to take a look at that XLM BTC chart. I talked about this one in the community mentoring session the other day. And I talked about, this is, what's interesting for me is that you can clearly see on this chart, right? This is the day that I ended up hedging on BTC, April 20th, Monday. And then I pulled it off. Pulled it off on Wednesday. Now we trade into Thursday, right? And I had my, as I was just saying, I had just about everything to the short side, right? And I saw this trade. This was the only long that came up on my system. And I chose not to take it because I didn't want to have long exposure at that time. And I was pretty into my CFDs and ETF trades at that time. So, this is a trade that came up beautifully on my system. I chose not to take it, and this was not a trade that I entered. But you guys can see the continuation long signal. Now, XLM BTC has had a nice movement to the upside. Listen, on this very, very large candle to the upside here, when we're talking about swing trades, you have to understand the way that I trade. This is certainly an area where I would be almost certainly hitting my first take profit. In fact, we can measure that objectively. So let's look at what ATR would have been on the 20th. $29 sats. All right, so I would have taken some profit at about 758, and I would be looking for, I think that's right. Yeah, about 29. Yeah, about 29. Yeah. I've been taking some profits around 770, 780 sats, and waiting for my exit signal to be exiting the trade. So right now, I would actually be in the mood to ride this trend. Now, on a candle like this, opportunistically, if you haven't taken any profit, I would certainly recommend taking about 50% of your profit and setting a trailing stop loss. I would be setting a trailing stop loss right now at about 803 sats is where I'd be setting a trailing stop loss right now. Or you could set your trailing stop loss to break even if you really want your trade to have room to breathe. And I would be holding out. I would be holding out until my system told me to exit this trade. Overall, I think that XLM BTC is likely to pull back here. I think that BTC pairs might pull back, especially if BTC continues its movement up. We've had about 4 big bullish green candle days, and this is kind of wave 2. So a pullback maybe around the 800 sat level, and then a continuation would be okay. This is our previous high, so we are attempting to make a new monthly higher high, which is pretty interesting to see. And we did do that. We have sold off. So let's see if we can consolidate at this level, get some support built on this shelf, and actually trade higher than, let's say, 850 sats on a continuous closing basis. But for me, from a trading perspective, I would be looking to take some profit on this candle, set a trailing stop loss or move my stop loss up and wait kind of for the next optimum entry into XLM BTC. Damian Hughes, look at Cardano. It's up big. It's up big money. It's up big percentages. Let's see. I would actually say that XLM is doing better than Cardano. I'm long on the USDT pair. Looking good. The continuation long signal from yesterday. This is only day 2 if it's moving to the upside. And overall, again, things are looking pretty good. Let's see here. RLC USDT for Mr. Agency. Now, RLC USDT is looking good, but we're getting a no trade signal because this is a pump out of nowhere. So I'm always skeptical about these, particularly because you can see from RLC, which don't get me wrong, I've had some good trades on RLC, but we can see from RLC how it has this tendency to scam wick up and then, and then sell right down. You can see it here, and you can see it here, and you can see it. Let's go back. You can see it a whole bunch of times out of RLC, particularly after the last few weeks. Now, this overall looks pretty good. We have kind of come down, formed this triple bottom, and have pushed up. We are above the baseline. We are getting a long signal on today's daily close. But as you saw, we were getting flashing a no trade sign. Now, I'm actually totally fine with entering long after a long wick like that in crypto. Often those trades work out well for me. There was one we just took like that not too long ago. Can't remember which one it is right off the top of my head. I'd have to look at my trading journal. But yeah, RLC, this is just going to depend because as you said, the no trade condition was on the chart. It is now flashed off of the chart, and that won't be locked in until daily close. So RLC actually doesn't look bad. If we get the no trade warning, then I would be waiting for a day to see if we can actually get the okay to trade signal from the baseline indicator. If we were to go long on RLC, at current price, I would be looking for take profits at about 0.369, 0.4028, and 0.4366, and managing risk at about 0.2845 is how I'd be structuring my trade. Paul wants me to talk about the oncoming World War III that's going to happen. Maybe this isn't the best. Maybe this isn't the best place to talk about that right now. I don't have my thoughts firmly centered on that just yet. I don't want to cause anybody to do anything reckless. All right. Let me get the chat open. Thank you so much, Damien, for the lemon. All right, guys, let's slide over here. There's a few meditations that I want to share with you before we end today's episode. Let me give you guys my thoughts on overall life and what's going on right now. So just hold on 1 minute. Don't go anywhere. Yes, I certainly did leave the microphone on again. But that's okay. Listen, guys, overall, pretty exciting day in the markets. I think there is some good signs to see. So if we look at cryptocurrency, it does seem like we are getting some pretty positive movements to the upside. Now, everything overall, indicator-wise, is looking good. And we are systems traders, so we're going to follow along with what our indicators say. It's quite possible that at daily close, we're going to be signaling for risk-on trades to the upside. However, if we look at what the indices are doing, if we look at what the traditional markets are doing, they do look significantly weaker and are pulling back. So I don't want us to get over our skis here, particularly as we're moving into the weekend, right? There's definite possibility that we can get some better optimum entries later on today. Let's see how price is looking when we get into the pocket of when we should be trading as we get closer to daily close and be looking for slightly better opportunities, right? Also, make sure that you guys manage your risk. Yes, this could potentially be the beginning of the next wave to the upside. We might actually be pushing up to the 8s. And I've said before, if we push to those 8s, if we get above 8,200, we're going to be touching 10,000. It's going to happen, right? That's an area of acceleration, right? Once we get over that first level of resistance, I think that we'll easily will slide like a knife through butter to the upper level of resistance. Not an issue there, right? That's a nice band of acceleration. But let's be safe while we do this. The way that we earn money consistently is by position sizing, diversification, and following the rules very closely, right? You can have the best signals in the world, and sometimes, and most of the times we do. But if your overall trading strategy doesn't encompass risk management, then it doesn't matter how good your signals are. It doesn't matter if you win a trade 80 to 90% of the time. If you don't have risk management as your first and foremost aspect of trading, then when that loss comes, it's going to be like you never had those losing trades. So focus on that first. If you guys want some help with that, make sure to talk to us about it in the Discord, discord.crackingcryptocurrency.com. Other than that, guys, be safe, be good. Let's see here. Starting a new book tonight. I haven't yet picked out exactly which one it's going to be. Make sure you guys go watch. I'd recommended the movie The Goldfinch the other day. Absolutely fantastic movie. So make sure you guys go watch that. May not be for everybody, but it was quite a beautiful story and an even better book. Apparently, I'm told, but that's generally the case. We will be back. Oh, other things that I'm going to be watching pretty closely. We've got some interesting economic developments coming up here, and I'm obviously watching what's going on with the coronavirus fairly closely. My opinions on that do seem to be shaping as we continue to move, because I'm seeing just a lot of other people get antsy as well. And at the same time, I'm seeing some more restrictive measures put in place. So, anyways, be safe out there, guys, especially with your trading. Utilize this time, because at the end of the day, we can all have our opinions. We can all have our beliefs on exactly how these things are happening. But at the end of the day, a lot of these decisions are out of our hands. But what's not out of our hands is what we choose to do with our time. So if you've been watching a lot of Netflix, it is time to shut that down, turn the TV off, start reading a book, start working on your trading strategy, start improving as a person. This is a fantastic time to learn another language, to get yourself in shape, to learn a new skill, learn how to program. All kinds of opportunities, guys, come out of this quarantine. A better, stronger, faster, maybe even better smelling human person. Anyways, we're here to help you guys out. Make sure to join the Discord at discord.crackingcryptocurrency.com. And if you want to trade along with us, make sure to sign up at premium.crackingcryptocurrency.com. If you're new to the channel, make sure to like, share, and subscribe. Heck, if you've been to the channel 1,000 times, make sure to like, share, and subscribe. And we will be back tomorrow at 12 p.m. Central Standard Time for another episode of Cracking Cryptocurrency, Breaking Bitcoin Market Analysis. Leave any questions or comments in the section down below, and trade safely, guys.